For tuning into this earnings conversation with Paras Defense. The numbers left a bit to be desired in the quarter. Revenues were down, well, sequentially we're down 26%, though on a YOY basis, which is probably the way you should look at them, up about 19%. Gross profit margins stayed kind of stable. In fact, YOY gross profit margins as well as EBITDA margins were down. In fact, 600 basis points correction on the EBITDA margins on a YOY basis, and profit after tax at 6 crores versus 7 crores YOY. So a bit of a disappointing quarter from a company which is promising quite a bit. Amit, Mahajan joins in to talk about what went behind the quarter and what could be the outlook ahead. Amit, good having you. Thanks for taking the time out. I would suspect that you guys would be not extremely happy with what you've done in the quarter.
We have no regrets because our company do not, or rather cannot function on a quarter-to-quarter basis. I've been telling this a lot of times. At the end of the year, we will still continue or better than what the guidance we've been doing. So we have a very, very strong order book. We have very, very growing opportunity funnel. And all of that will translate into a good revenue growth at the end of the year. Yes, quarter on quarter, there, as you rightly put on, there have been some fluctuations here and there, but this is not the right indicator of how the company is performing or how the opportunities are in store for us.
Would you have hope for a better start to the year, though? That's my question. I agree. You may do this in the end of the year, and we'll come to that as well. But is there something that went behind why the margins in the quarter went down so significantly?
Okay, the margins went down because if you look at from year to year, we have got a huge investment done into our own manpower. So our employee benefit costs have risen. Why? We want to take care of our employees, which are the engines of our growth. Second, we've also onboarded some very, very professional team members who will then not just carve the near future, but also will be very strong contenders as a stakeholders in the growth to come. So we have done investment into our employees, and hence there is this quarter we may see something like this. But again, you will not have any of this effect coming on to the yearly performance of the company.
Why do you say that? Let's talk about that.
Because not just we are envisaging a better revenue, but also a better profitability. So when you look at it from a yearly or a Q1, Q2, Q3, Q4, all quarters put together, the employee cost which has risen in Q1 will flatten out over the period of the time. And your revenues are going to grow, your profitability is going to be better in the next quarters. And at the end of the year, like I'm mentioning, we will not only sustain, but we will be slightly bettering our PAT and EBITDA margins.
Now, I'm just trying to understand this. The employee costs will not fluctuate quarter on quarter, right? You will have to pay employees every year, every month of the year. So is it that you envisage a sharp uptick in revenue and because of operating leverage helping you take care of that EBITDA margin performance?
Absolutely. There will be a sharp uptick. Coming back to why this quarter performed like this and it should have been slightly better, if you look at it from a legacy standpoint, defense markets have always been like this. Q1 is the worst. Q2, it starts building up. Q3 is a warm-up time and Q4 is the final match.
Okay.
So this has always been the case. However, we've put in a lot of effort to try and flatten that out, give it a growth strategy, and make sure that we have started rolling in some things in Q1 as well. That's the kind of planning we've been trying to do. But if you see legacy, say about 5 years back, Q1 used to be minuscule or maybe insignificant when it comes to comparison with Q4. So we're doing much better than that. Yes, the effect of the investment into manpower that we said has some on the profitability, but it does not matter on a yearly basis.
Okay, so let's try and put this into perspective. So you look at the business on a consolidated basis, I presume, Amit.
Yes.
You've done 2,222 crores, if I'm not wrong, FY23.
Yes.
All right. What is the guidance for, and when do we see the uptick? Does it come largely in Q4 as you expect, the final match?
Q3, Q4 is what we are envisaging the uptake would come. The guidance would be conservative on a 30 to 40% basis.
30 to 40% basis on the revenue front. And what about operational metrics?
operational metrics, we would be able to sustain, like I mentioned to you,
56%.
about the PAT would be around 18 to 20%, and EBITDA would be on the basis of 28 to 30%.
Okay, so you were saying that you did 25% for 2023 on an average. You will take it up to 28%, and that would require a significant bump up in the follow-on quarters because you've done a 22% at the start of the year.
We exactly know what kind of orders we're going to, clock in this financial year. The good part, which never used to happen in the defense business, was order visibility. Now, currently, as we speak, I have order visibility for next 2 years. So I exactly know where I'm going to end those two financial years. All the subsidiaries, and I'm not factoring any one of the subsidiaries to contribute currently.
Okay.
All the subsidiaries will only add to what I'm trying to tell you.
Got it. Okay, tell us a bit about, you've been talking about the kind of orders that you're executing. You've been talking about book-to-bill ratio of 2x. Tell us a bit about the nature of the orders, the order wins that you expect in the rest of the year. And do you expect the book-to-bill ratio to go higher from where it is right now? Because a bunch of companies are talking about the order flows looking even larger over the course of the next 12 to 24 months.
So let me try and synchronize your question because it's a long one. Yes, the order book that we have today is in excess of 650 crores. Most of the orders are on the product side. Unlike all our legacy business used to be on components and subsystem side, we have product businesses. We have Saras Mark II as the order. We have submarine periscope as becoming a big chunk of our order book. We also have tank upgrades as orders. So all of these orders are long drawn. In the sense, they have opportunity not just for this year, but they have follow-on opportunities as well. So these orders, which I'm talking to you about in excess of 650 crores, has a funnel of more than 2,000 crores. So you can imagine the 650 crores not only take care of my next 2 years, but as I start building up, these orders start multiplying. So it carves a great future for me.
Okay. I have one final question, and that is on the first point that you made in this conversation, that you've now housed a clutch of very important senior employees which will dish out newer areas of growth maybe, or improve the current areas of growth. Can you talk a bit about what is it that has happened in terms of the employee addition, in what areas, and when do you expect those areas to start contributing?
So we've had significant additions in the areas, our existing star areas of electronics and optics. But at the same time, we have significantly increased our employee resources in our subsidiaries because we feel those are the areas which will start contributing. Now, if you see the drones, the initial order has started kicking in. We are expecting huge amount of orders, and those orders, this what you are seeing about a 40 crores order is just the tip of the iceberg. Now, all that we need to do there is start building up resources to be ready for a much, much higher growth. The same thing we are doing with anti-drone system. We are in a development mode when it comes to anti-drone system. When the anti-drone systems business starts kicking in, just like drone has after 2 years, anti-drone will also start after 2 years. So about a year from now. That time it's going to be bigger than drones, and it's far more complex a technology. So all that you need for a business like that is good set of manpower, and that we have already started investing.
Okay, Amit, thanks for those clarifications. Really help, and we wish you all the best for not just the last quarter but the intermediate quarters as well. Lovely talking to you, and all the best for all of those.
Thank you so much, and it was wonderful talking to you as well.
Likewise. And viewers, thanks for tuning into this conversation with Paras Defense. They say that while the margins have come in at 22% for the quarter, they expect the annual averages to be near 28% or thereabouts, and they expect to meet the 30 to 40% revenue growth guidance that they would have laid out at the start of the year.